Alrighty guys, what is going up? Welcome back to the best investing money management channel on YouTube. I am your host Carter, and in today's video we're going to be looking at the top premium ETFs to buy, hold, and pretty much hold for the long term. These ETFs are going to be some of the top ETFs to actually hold for the next 5, 15 years. The holdings in a lot of these are absolutely fantastic. So starting off with the very first one, I think you know where I'm going with this. ARKK, right? This is ARK Innovation ETF. So this is backed by Cathie Wood, who is a known investor for calling out companies like Roku, Square, Tesla, a lot of companies that are really just disruptive companies, okay? But this ETF is the Innovations ETF. So this is seeks long-term holdings in disruptive innovation, so disruptive companies. So we have companies like Tesla, Roku, Zoom, Square, all these companies that are disrupting a lot of the sectors, right? And you guys can see the chart is beautiful, and given the market sell-off, this just brings opportunity to buy at a massive discount. And I think I would rather see you guys invest in an ETF like this than riskier AMCs or GMEs or BlackBerry stocks, just because this actually can carry potential for the next 15 years. And the volatility is a lot lower with this, so beginners it's more friendly to. So now the next one here. This is just another no-brainer investment. VU. I think every investor in the entire world should own VU or SPY. Okay, this is the S&P 500 ETF. So this is the ETF that actually is going to be tracking the S&P 500, which represents the top 500 U.S. largest companies. And the beautiful part about this is this on average gets a return of 10%. But recently, over the past 3 years, this has given a return of around 40%. So beautiful for the long term. The volatility on this is very, very low. You guys can see. So it's just another no-brainer investment. The top holdings in this ETF is going to be the largest holdings and the largest companies in the United States: Apple, Microsoft, Amazon, and Facebook. All of these are beautiful. The expense ratio is very, very low, coming in at around 0.03%. $3 for every $10,000 you have invested in fees, which is very, 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 very low. Okay, this is just a beautiful one for the long term. But if you guys want a little bit more risk, but a little bit more reward, QQQ is the next one. This one is a tech ETF. Okay, so it has a lot of the pretty much 100 most largest tech companies in the United States. Top holdings for this are the same of the S&P 500 with Apple, Microsoft, Amazon, and Facebook, but the growth, in my opinion, is a lot larger. This on average gets a return of around 15% compared to the S&P 500 of 10%. The expense ratio for this is 0.20, $20 for every 10,000 invested, which is very, very low. All right. In my opinion, I think that this one is probably the absolute best dividend income ETF you can have. Okay, this is ticker symbol SCHD. This is pretty much the Charles Schwab dividend ETF. So this represents the top 100 US dividend companies in the United States. Okay, so the top holdings in this is my favorite, probably my favorite dividend stock out there, Home Depot, IBM, Cisco, and then Blink. Okay, look at the return on this. Okay, so pretty much $50 highs here at around 80. So the S&P 500 had a return of 40%. This has a return of 52%. Plus having high quality stocks that pay a dividend. So this one is just phenomenal because you guys can count on cash flow coming in and start compounding your account. Okay, but if you guys want a little bit more risk, okay, a little bit more risk but a little bit more reward, we have ticker symbol XSD here. So this is a semiconductor ETF. So you guys can see the lows here at around 106, highs here at around 203. So the return on this thing is really high at around 90% if you bought at pretty much lows and sold at highs. But if you just held it, we're looking at a return of around 70%, which is definitely a lot larger than the S&P 500, the dividend ETF, and all the other ones we mentioned. So this one has companies like NVIDIA and a variety of other companies that are really headed into the computing and semiconductor software. So the reason why I think that this carries potential is because I think we're just getting started on computers. Honestly, I think the overall potential is still really, really high here. But overall, guys, these were the top, in my opinion, some of the top ETFs to actually hold for the next couple of years. I'm super excited to see where all these goes, and I'm going to be buying every single one of these this week here. So I hope you guys enjoyed it, and overall, I hope you guys got something of value, and we will see you guys later. Take care.